and welcome to the show. I'm Puneet Wadhwa and we have Gaurav Ratnaparkhi, Head of Technical Research at Sharekhan by BNP Paribas today with us. Hello Gaurav and welcome.
Hello Puneet.
Let me start by asking you for regarding the outlook for the markets in 23. Do you think that the Sensex will hit 57,000 levels again before it hits the 75,000 mark?
So before going to 2023, I think it is important to understand from where the markets are coming in last 1.5 years. So the Nifty and the Sensex had entered a correction mode in October 2021. And after that, they had a correction, which was a multi-month correction that developed in a slightly downward sloping channel. And in the month of June 2022, the market bottomed out and actual breakout from the channel happened in October 2022. So October, November, we had this rally, and after this, in the month of December, we are consolidating the gains. So that shows that we have convincingly broken out from the multi-month downward sloping channel. So that means Sensex going back to the lower levels is unlikely. And in fact, I'm expecting the Sensex trajectory to remain positive for the next year, that is for 2023. And for 2023, my Sensex target is around 68,000. And the reversal for this bullish stance will be around 58,000. Whereas for Nifty, the target comes to around 20,300. Both these are the channel equality targets. And for that, Nifty should hold on to the level of 17,500.
So you mentioned about the recent correction at the index level. So which also saw the PSU banks, drop quite sharply. Does any stock appear oversold on the charts? And what's a broad view on the Nifty Bank Index? Because banking is one of the most crowded trades for 2023, according to most analysts.
Yeah, that's right. Especially the Nifty PSU Bank Index has seen a marvelous rally in last few months. And after that, it has seen this short-term correction. But this is just a pause. This is just a pit stop in the overall rally. And this should be used as a buying opportunity. Not too many stocks have actually gone down to the oversold zone as such. But still, they are posing this correction as a buying opportunity. So from the smaller PSU banking space, my picks will be Union Bank and Central Bank. For Central Bank, the correction which has brought it down towards 28.30 is actually a buying opportunity. The stock can very well resume its larger uptrend and retest its highs, which were around 41.80, 42. Whereas for Union Bank, any dip towards 75 will be a good buying opportunity, keeping a stop loss below 65. The first target on the higher side will be 95 with potential to head towards 120 in the medium term. And from the larger PSU banking space, my pick is SBI. And as far as the Bank Nifty is concerned, Bank Nifty actually has been leading the market on the way up, and it entered into the uncharted territory much ahead of Nifty. So the next up move is likely to be led by banking space. And for Bank Nifty specifically, my next year target is around 47,000 to 49,000.
Any names from the private banking space that you like?
Yeah, so Axis Bank is one stock which I think will outperform the overall banking space. The stock is showing very good strength on multiple time frames. Even despite of this short-term correction, it managed to hold on to its crucial daily moving averages. And in fact, that should be taken as a buying opportunity. So Axis Bank, one can enter at current level, keeping a stop loss below 890. And on the higher side, first target will be around 970 with potential to surpass 1,000 mark as well.
So IT stocks have actually been a no-go zone for a lot of fund managers, given the recession-related headwinds. What are the key levels that you are watching for Nifty IT index? And are there any contrarian picks from the large and the mid-cap IT space, purely from a technical perspective?
However, since June 2022, if we look at the monthly chart, then this stock has been forming a broad base for itself, which is a multi-month base formation that happened till October. And in October, November, we saw a good up move, which is showing an impulse structure. And impulse is a structure which indicates that the index has actually bottomed out towards October 2022, and it has resumed its larger uptrend. And this correction, which we have seen in last 3 weeks, has actually retraced 61.8% of that up move, which was seen in October, November. And the exact 61.8% retracement has acted as a very good support, which is around 28,100, where the IT index is forming a base since last 2 weeks. So this is a very good level for Nifty IT index, a high probability level to start its next impulse on the higher side, which will again be a multi-month impulse.
Still talking sector specific. China reopening has brought back focus on two sectors. Metals were probably demand related, and healthcare and pharma in case COVID cases rise. How should investors approach these two?
So my sense is that one should have a minimum exposure in these spaces, mainly because metals being a high beta space will have high level of volatility, and pharma on the other hand will be more or less situation driven.
What are your top bets from the large cap, mid cap, and the small cap universe for 23? Just names and broad return percentage expectations in the next 1 year.
Yeah, so I would still stay away from small cap space. I would wait for some more clarity to emerge in terms of evolving situation. So small cap, I would still wait for some more confirmation. But yes, there are definitely certain opportunities from large cap and mid cap space one should definitely capture. And from the large cap space, my preferred pick will be Indigo. I think Indigo is preparing for a multi-month rally. It has seen a significant consolidation and is set to move out of that consolidation. In fact, it is trading near a very crucial falling trend line, and this consolidation near that trend line is a sign that it is preparing for this next multi-month rally. So Indigo will be my pick, where I'm expecting the stock to show good returns, and it can very well retest its highs seen at around 2380 with a potential to head towards 2500. So Indigo will be one of the pick, followed by Bharti Airtel. Bharti Airtel is again a stock which is showing very interesting long-term structure, and this correction which we are seeing in this month is providing this opportunity for investors to align with the larger uptrend. And at around 800, it has a very good support, so one can buy at current level also. And going ahead, my targets for Bharti Airtel for the next year are beyond 1000, 1010 to be specific. Whereas from mid-cap space, my preferred pick will be Federal Bank, and followed by Bharat Forge. So Bharat Forge will be my second preferred pick from the mid-cap space.
Any contrarian bets or dark horses in terms of sectors?
So like we discussed, most of the market participants are still apprehensive about the IT space. But I feel IT has already bottomed out, and it has already started the next leg on the upside. And this short-term correction is giving very good opportunity for traders as well as for investors to align themselves with the next up move, which is on the cards. So my contrarian bet will be IT space itself. I think in 2023 it is likely to be one of the outperformers in terms of sectors. So within IT, the IT index itself is expected to give around 20% kind of returns for 2023. So certain stocks like Persistent, Coforge, HCL Tech will deliver much higher returns in the range of 35 to 40%. So from contrarian perspective, I think IT will be the space to watch out for.
Lastly, how should investors position themselves in the markets ahead of the budget in February?
So I think we are towards the fag end of this short-term correction. We are likely to see some base formation which can take place in the range of 17,800 to 18,200. So this 400 points kind of consolidation is expected over next few sessions, and this should be used as a staggered buying opportunity. Once this base formation is done, and once 18,200 gets taken out on the higher side, then I think we will be starting the next rally, which can last for next couple of months at least, and can surpass the all-time high seen at around 18,888. So I think this consolidation of 17,800, 18,200 should be used as a staggered buying opportunity. Position sizing will be an important factor.
Thanks, Gaurav. As a disclaimer, would it be safe to assume that you may not have an exposure to the stocks we discussed today?
Yeah, sure. So I don't have personal exposure in these stocks, but we may have recommended these stocks to our clients.
Thank you, Gaurav, for your time today. We hope to see you soon.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.